Welcome to This Week in Money, the source for market opinions. Here is Phil Mackesy.
David Morgan is our go-to guy on silver. You can find him at silver-investor.com. It's the home of the Morgan Report. He's coming to us today from Spokane, Washington, the heart of Morgan country. Hey, David, it's good to have you back on This Week in Money.
Phil, it's great to be with you.
All the news this week, of course, Cyprus, people worried about bank runs and what's going on there. It is obviously affecting precious metals. What's it doing to the silver market this week?
Well, it's mixed, really. We've seen silver. First of all, we thought that there'd be a reaction to the precious metals prices. I think everybody in the sector pretty much expected that on Monday you'd see a pretty big rally. I wasn't convinced, not that the impetus wasn't there from the Cyprus event, but nonetheless, I've watched this market for so long, and I realized that don't expect the obvious. Having said that, this week has been probably a little more positive than negative. We haven't got to close yet. But what I want to go back to, Phil, is what I wrote in the Morgan Report in the March issue, and this was kind of forecasting what we saw in Cyprus. The quote of the month, I quoted Eric Sprott at the Silver Summit, and what he said was, you have to be, and this is an exact quote, you have to be cognizant of the fact that when you have money in a bank, you have a risky investment. Most people don't think of it that way, but I certainly do, end quote. Again, Eric Sprott. So I started the report with that, not knowing, of course, what would happen in Cyprus, but warning all my readers that reality isn't always what you think it is. And I went on in the report to explain in the U.S. banking system, and I'm not that studied on others, but that basically that deposit that you think is yours is basically on the ledger sheet theirs. And, of course, this is shocking for people to understand it. Now, I do not want people to sit there and run out and grab all their money out of the bank. I'm not suggesting that. What I am suggesting is that you, one, wake up and really pay attention. Two, have some money outside of the system. And I've been advocating that from well before the time I made the Matrix video. And I really want to emphasize it now because I did an alert this week for our members talking about what the Wall Street Journal had to say about the bond market. And they basically said the bond market is very dangerous and it could, or it didn't say it could collapse, said it would. And it also indicated the time frame to be near. Now, this is kind of stuff that I would say, except I wouldn't say it was, near. No one could forecast time very well. But it was alarming to me that something as substantial as the Wall Street Journal would make comments like that. So I made a video of it, sent it out to all our members just to shake them up a little bit more. I think most of the readers that read us either at our cursory level on the free list or the paid members are very awake and aware, but nonetheless, you can get even complacent in that modality. Well, I've got my silver, I've got my gold, I've prepared this, I've prepared that. But this is a little bit of a reshaking of the tree, you might say.
David Morgan, our guest here on This Week in Money. You were talking about Eric Sprott earlier in the show, and both he and John Embry in the markets, in the news this week, talking about manipulation in the silver and gold markets. This is a familiar theme, but it's one we ought to revisit every once in a while. Is there manipulation in these markets? Where's it coming from? And how can we protect ourselves from it?
Well, Phil, that could take probably a couple of days, and I'll give you, a cursory answer to it. Yes, the markets are manipulated. In fact, almost all the markets are. Who is it? Basically, it's the big boys, meaning if you look at the Working Group on Financial Markets, Google that and read it, study it, understand it. It can be from the president. It can be from the Secretary of the Treasury. It can be the CFTC. It can be the SEC. It can be anybody involved at a very high level can come into any market they deem and basically do what they feel is necessary to do whatever they feel is necessary. In other words, the market is moving too high, too fast, or the market is crashing. We need to stop trading stocks on the stock exchange. We'll pull one of the fuses, as they refer to it in the slang terms. So there's a lot that goes on behind the scenes, and a lot of people just don't want this reality. It's like, well, that can't be. The markets are free. My take on it is that the free market forces are greater than their manipulations over the long term. I mean, if they can manipulate every tick, every trade all the time, then silver would still be under 5, and it's not. It's near 30. Same thing for gold. It'd be at 250 still, and it's not. It's around 1,600. Nonetheless, certainly these prices would be far higher if it wasn't for these smashings. And mostly these smashings in these markets, particularly in the metals markets, is a psychological smashing. It's people that think, oh, maybe gold's a good idea, and they get in, and then they see the price go against them for a couple of years, like it's been happening here in this long consolidation period, and they get discouraged. Or people that think, oh, geez, I'm going to get in when it gets, low, and then it gets low and it goes lower, they're discouraged. Or they just wait and they never get in, and that happens a lot. There'll be people that say, well, I'm waiting for that low, and no one can pick an exact bottom every time. And they'll wait. It's going lower, then it starts to go up, and it starts to go up, and it starts to go up slowly, maybe at first. And so, well, it'll come back down, and I'll wait. And they just keep waiting. It moves away from them, and they never get in. So a disciplined approach, especially in today's environment where I just told you about the bond market, what Spot said about the banks, what's going on in Cyprus. These things aren't going away. These problems exist. They're real, and there are no solutions. The solutions basically is to hit the reset button. The problem is when you hit the reset button and reboot your computer, sometimes some of your software gets scrambled and you have a big mess on your hands. I think that's a good analogy for what we're going to see. But nonetheless, the reset button has been pressed. What we don't know is how long it's going to take to reboot the system or how it's going to reboot.
David, speaking of silver price fixing, J.P. Morgan wins their lawsuit. What's your take on this one?
Oh, boy, that's a tough one. Well, first of all, I'm discouraged by it, but I'm not surprised. It's extremely difficult to prove manipulation. That's the problem. If you can go in and say, look, this is what happened, and this is, the day, this is the time, this is the fix, the only way that you would do this is to drive the market down is an, unequivocal fact. But then you go in and say, you had to prove intent. You have to say, well, they wanted the market to go down and cash out. And I say, well, J.P. Morgan made all this money on that one trade, but so did this guy, and so did this guy, and so did this guy. So who's at fault here? And it's a real tough one to prove. What really discouraged me was that, if I read it correctly, and I'm pretty sure I did, is that this absolves them of a lawsuit coming back at them for manipulation. In other words, the ruling was it's thrown out, and you can't come back with a similar lawsuit about manipulation in the silver market against J.P. Morgan, which is too bad, because I think that if a different approach was taken, you stand a far better chance. But I'm not a lawyer, and of course I do have emotion involved in this arena, obviously.
Okay.
I've been more in the background than the foreground, and the guys in the foreground here have pretty much been Gatta and Ted Butler, and probably in reverse order, probably Ted and then Gatta. Okay. But I've always held the view that if you expect the authorities to do the right thing, you're expecting too much, and I still hold that view.
David Morgan here on This Week in Money, and with Cyprus being a canary in the kind of the European coal mine here, are we going to see more trouble there? How is the continuing economic problem in Europe going to affect silver prices going forward?
I think going forward, it's totally positive. I really do. Gold, of course, will probably take center stage. And, of course, gold is still used as an asset, as a monetary asset in central banks, primarily in the eastern countries in Asia, China, India particularly, but other central banks as well. I just saw something come across the wires this morning that Texas, the state of Texas, is looking to put gold away. I haven't researched it enough to know if it's a fact or not. But there are states here in the Union that are looking to use gold and silver as exchange, Utah being one, and there's several others. So people are waking up, and the money is a trust issue. It's a confidence game. And I wrote about it years ago calling dollar.com, which was a metaphor for dollar.con, meaning it's all confidence, and once you start to lose that confidence, look out. And that's what that bond article that I put out as an alert is all about, is that confidence could be lost quickly, and the bond market could get hit hard. So, again, I don't want to sound like an alarmist, but also I think the end of this bond article I keep referring to is tick, tick, boom. I think that's a good metaphor for how close we're getting, tick, tick, tick. Phil, back to your question. I think you'll see more and more people, they'll say, if I can't get my money out of the bank, I'm going to start my own bank. I'm going to start the Bank of Frank. I'm going to start my own bank, and I'm going to put gold and silver in my bank. And I think you'll see more and more of that happen. I think it may pick up slowly at first, but gain momentum. And if there's another one of these type of events, and the Cyprus thing isn't over. I mean, obviously Russia came into the act strongly. And basically, there's sort of an ultimatum going on between what the EU wants to do and what the Putin contingency wants to do.
Yeah.
And so this thing could really unravel quickly and maybe in a direction that most people aren't thinking right now.
We're looking at some crazy times no matter what happens, and probably a perfect time to talk to you about the Morgan Report. It's probably something we should be thinking about if we need some professional advice. Tell us what the Morgan Report can do for us and how it can help us through the next couple of months, the next couple of years as we plan going forward.
Well, obviously, it's been my life's passion, and it's my intent to be of maximum service to others. Certainly I benefit as well, and that's the paradox of the free market. If you're really sincere with what you do, you can benefit yourself and others at the same time. Most of what I write about is stuff that I invest in myself. It's basically an opportunity to look over my shoulder and see how I trade. I don't just trade, I invest. Most of my money is for long-term investment, although I do like to position trade when opportunities come available. I've got an open order in right now to go long the silver market because of what we just discussed. I think we're going to get a breakout here in silver and gold very soon, and I think it's going to continue. So you're going to get my insights. It's certainly not me. I've got 2 research analysts that work with me. I have a staff of about 8 these days. We're always looking for opportunities to help people make money. We want to balance risk and reward. We're a little different than a lot of people that are in this sector, and that is we don't really focus on these micro-cap mini companies that are going to make you a fortune. Most of them will only lose you money. We focus more on top-tier cash-rich unhedged mining companies that are nearly guaranteed to, over the long term, provide you stable capital appreciation, mid-tier companies that have a strong growth rate that can continue to give you probably better gains than the top tier. And of course, we speculate. We spend a lot of time there studying, but we don't pick very many because, in our view, they're extremely difficult, and to find ones that are going to make you money is difficult at best, and that's why we call them speculations. This is money that you bet a little to win a lot on. You don't want to bet a lot to win a little. And so that's our approach overall. More is explained at the front page of themorganreport.com or silver-investor.com. Either URL will get to the same website.
All right. You can find David Morgan at silver-investor.com. As mentioned, it's the home of the Morgan Report. You can follow Dave's Twitter feed at SilverGuru22. And don't forget YouTube channel. That's a great one. I enjoy watching the videos there at SilverGuru. Hey, David, it's great to talk to you, my friend. Thanks for your time.
Phil, great interview. Thank you so much for yours.